Hello, hello. Welcome to another episode of Trade Like a Sniper, where I walk you through a top-down analysis and frame a trade on a lower time frame, all using ICT's concept. So this is how I find a bias. This is how I come up with my narrative and how I take my entries. There's some tools I can't utilize, like news and kill zones and lower time frames, but it's okay. So I'll start on the 12 month, lowest maybe 3 month. 2 month, and I'll work my way down on a random asset using the replay tool on TradingView. So let's go to the 12 month first, and let's pick a random asset. Indices. Let's see. Indices go up all the way, so I don't be too biased. I like something with some up and down movement. Let's see what we got. If we use a stock, we'll stay on the higher time frames because of all the gaps. Clean spot. We could try that. I don't know what that is. Not very nice. Even gapping up on the 12 month. So we will pick something better, or maybe a more well-known stock that's been trading longer. If we pick a stock. No, we did that. We did all of this. Most of them. How about Adobe? Sounds cool. Very nice. So I'm going to scrunch up the chart, and I'm gonna go to the. I'll go to the 3-month time frame. Okay. So let me go to the 3-month, and okay, pick a random point of time. Shimmy, shimmy. Random. All right. So I'm going to go to the 12 month again. Just annotate this here. So we have this on the 12 month. Busy. Really easy. Okay, so you work your way down. In this case, I am going to put in the middle line. Painted black. Okay. And I'm also going to highlight the top of this candle as well. If we do come into here, I might go back and see where this red candle is as a point of as an order block on the 12-month chart. So I'm going to go to the 6-month. All right. So, okay. So we have a 6-month gap here. Just a note. This is 6-month. We have one here as well. Came down, came in, came down again. Took out that low. Internal, external. And now we're in this 1 year. So, okay, I'm going to go to the 3-month. Okay. I like this 3-month order block. 3-month. It's a bearish OB. 3 months. Okay. I'm into here. Are we going to make another low? I'm just going to go to the monthly. Probably a gap. Okay, so we have a more refined area here to possibly take a trade. This is a breaker. Okay, it's target. So I'm just going to highlight this because this was a monthly busy, SIBI on 1 month. And the thing is, this is a wick sandwich setup, so sometimes that is also my long entry. So target here. If I take a long here, but we're also in this monthly SIBI. So let's go to the weekly now. Okay, weekly came into the small gap, respecting it very nicely. Inverted breaker. Came into it. Now we're here. Target up here. First target. Can we go to the daily? What year is this? 2001. I think we can. Okay. So let's see what happens in the daily. Wow. Okay, what a gap. Can we come into here? Can we come deeper? All right. So this was my target. It's close enough, so that's a problem. Because it wasn't that clear. I mean, there's no discernible gap or anything except these bodies which I want to target. So, bum. Now we have this gap here. We're in the CB 1 month. Could be a nice place for a long. Daily. Okay. One long here. You can do 1-to-1. We can come up into this gap here. 1 to 1.47. Into that gap, maybe? No. Into the R2F gap. My favorite gap. Oh, it's close. Super close. Is it gonna go for it or stop me out first? But the chin, I have my chinny chin. Okay, finally hit that. All right, so that's a 1.47 in the bag. Great. So we had that 3-month OB and we had that retracement. Let's see what we can see. Let's see what we can find. Okay, I'm just gonna hide this on the lower time frame. Okay, so we have the CB 1 month being used as possible support to move higher. Let's let price play. Okay. All right. Let's wait for another monthly candle. Oh, what a gap. Okay. Now we're halfway into this busy 1 year. This is a 1 year gap. So monthly, no problem. Coming down here, can we see a weekly? Okay, if this is like a quick reversal, we'll expect some gaps to be traded to and be respected. Order block. Okay, still making higher highs. Okay, I like this gap here. And I like this reversal. We already had one trade, but we're just doing one more. So this weekly, where we're going to target. This took out liquidity here and then reverse. So I'm gonna put my stop here. If we break that, we should be breaking that. So we're gonna target up here more into a premium area. All right, we have this and we have a higher one here, which I think we can get. And a breaker there. Can we hit a 2RR? Okay. Let's see. Okay. CB. Into CB again. Consolidating. Into CB. Into, okay, so this gap here should provide higher prices. It It does wick down. Takes out this, but overall this gap and order block, offering higher prices, and we hit our target. So we'll call it a day for this session. Since we hit 2 trades, why not? Why take a loss at the risk of just making more? Not necessary. So we got a 9% move on this at a 1.47R and a 21% move on Adobe at a 2R. So very nice all in all. We didn't even go down to the daily for this one. So pretty good. All right. So that's how I would do a top-down analysis. I don't trade stocks, but you can always utilize things like seasonality, interest rates, etc., indices as a intermarket analysis tool, commitment of traders, etc., etc. So that's all for this video. I hope you found it insightful. Let's just see what happened. Okay, should have went long. Went all the way to 700. Amazing. What price was it down here? Should have held, guys. You should have held. I should have held this position all the way to the top. Would have been a lot of R's. Anyway, toodles.